What is good, guys? It's Rey-Jay back with another video, and in this one I want to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'm going to break down what Jerome Powell said today that contributed to the market sell-off, and what's going on with the economic data coming out for tomorrow that will affect how the market moves. But before I break anything down, all this information, before I get into any more details, let me just say two things real quick. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. Now, this offer ends in just about 6 days from now, so check it out before they run out. Anyways, let's break down what's going on with the markets. Looking at the market right now, we had a red day for SPY. We saw Tesla sinking as well for external factors as well. Not to mention the market just continuing to sell off, especially after what Jerome Powell just said. The market was selling off since the beginning, though, and it started to get more aggressive when Powell started speaking. So I want to break down what he said first before I break down the charts. So what did Jerome Powell say? He basically hinted at the possibility of more rate hikes for the year. He mentioned that the Fed may not have to be done because there's still going to be different factors out there affecting inflation. And if there's a risk of inflation going up, the Fed may have to adjust their policies. So he basically said some very, very similar things as before, except he focused a lot more on the hawkish things he could say. I believe that he intentionally did this because of the way the market was moving and also because of how different institutions were positioned. So whoever it was that was kind of dictating this, Powell came out and he followed what was, in my opinion, more likely to happen. And this led to the market selling off. The market knew this from the beginning, and that's why the market started off very bearish. It kind of gapped up for the last liquidity grabs before we started to see some selling, and it got even more aggressive as the day went on. Powell also said that the Fed could remain more restrictive. There is a possibility that some of the work they've done to settle inflation down could actually work against them if the economy remains hot. And he said that the loosening of monetary policy is not something that's on the cards for now. So they're going to likely remain more restrictive. They have to keep rates higher for possibly longer than expected. And he said that the Fed has a lot of work to be done. So with all these things he was saying, and in short, he was basically being more hawkish once again, talking about the possibility of them raising rates again this year. And this caused the market to sell off. Now, moving forward, when it comes to earnings, there's not really a whole lot going on. We just have Unity coming out very soon. And besides that, there's not much coming out for Friday. For tomorrow, however, we have more data coming out. So we just had Jerome Powell give a speech. Then we have 2 more Fed speakers before the market opens tomorrow. We have Logan and Bostic giving some speeches. Then after that, at 10 o'clock a.m. Eastern Standard Time, or 30 minutes after the market opens, we have the Consumer Sentiment Report from Michigan, the 5-year inflationary expectations report, and more data involving inflationary expectations. This is all going to be very important because this is going to affect consumer sentiment and what consumers are anticipating for inflation moving forward. It's also going to affect the psychological aspect of the economy. So we're going to be watching this very carefully. If these numbers are too hot, this could contribute to more downside. But regardless of what happens, I believe that there's more downside coming to the market anyways. I'll break that down in just a minute. Now, the last but not least, the fear and greed index went from being very close to neutral to becoming even more fearful. And I believe that this may continue to become more fearful as time goes on. I think that we're starting to see a shift in the market, and the direction overall is contributing to these changes in market structures. We're seeing different indicators becoming more fearful again. The puts and call options went from greed to neutral as we're starting to see more puts being bought, and we're starting to see a big continuation in this development. So what's going on with the charts? What do I think? The answer is I see more downside, but here's how I think it's going to play out. The market could rebound a little bit after how much we dropped. We might rebound in the morning just a bit. We could see SPY try to get back above 435 for some time, but I think that it's going to likely reject and start selling off even more. And we're going to be watching 433 as key support. If we lose this, I expect SPY to come down very soon and get very close to the 4-hour time frames 200 EMA at this 430.3 area. I think 430 is coming, and I think that we're eventually going to fill the gap over the next couple of days, if not as soon as tomorrow if we lose 433. So I'm leaning more bearish, guys, especially if you look at the daily chart. It's looking more bearish. We have a very bearish looking engulfing candle. And it looks like we're going to see a bigger sell-off as time goes on, and we're due for this. Now, do I think the market's going to crash? My answer is no. I don't think this is going to be a true market crash, because when you zoom out on the SPY daily, we have a nice inverse head and shoulders that's forming. So I'm thinking that it's going to at least fill this first gap, and we'll just have to see what catalysts come out, how inflation looks during the next CPI report and things like that to see if we continue lower. And if we keep dropping, we have two gaps to fill, but then we have the daily 200 EMA at 423.8. And I think that very soon we're going to see this thing kind of sell off a bit just to cool off on the RSI. And then we're going to see the market rebound towards the very end of the year for December for a final squeeze to end the year. I'm still leaning in that direction. I just think that we're going to cool off for another week or two. And this is going to be completely healthy, completely normal, nothing out of the ordinary whatsoever. When it comes to specific levels, you're going to be watching resistance at 434 flat. If you break that, watch 434.5 and then 435. If we break that, watch 436 and then 436.5 as resistance. For support, make sure you watch that 433 area. If we lose this, watch 432.5. We have some support there, which is where our historical trend line was, this green trend line right here. This is from the October low, but I don't think that's going to hold us if we lose 433. I believe that if we lose 433, we're likely going to fill the gap very soon, within a day or two, a trading day or two, down to 430. So I still lean in that direction. I think that we're going to likely see that very soon. So this bearish divergence I was talking about on SPY ended up playing out on the 4-hour time frame, and this is having a big effect on the whole market. And I believe that this effect is going to continue. Now, part of why SPY and the market is becoming more bearish is because of maybe 2 or 3 other factors. I would say the 10-year treasury yield is very important to note. This thing has a gap above, so as this thing starts pushing to fill this gap up here, this is going to be a bearish signal. It's starting to push a little bit because of Powell becoming a lot more restrictive. So it could push a little bit more before this thing continues lower. I think that what's happening is it's forming a head and shoulders. So we're going to form our right shoulder. It's going to push a little bit. Then it's going to start sinking, which tells me that the stock market is going to drop. It's going to drop more, but the stock market is not going to be done. It's not going to be dropping forever. It's going to basically bounce later on for December for a very, very nice squeeze. So that's what this is still suggesting. That's why I'm talking about this head and shoulders on SPY, this inverse head and shoulders on SPY, which suggests that we could just sink a little bit more, but eventually we're going to bounce later on and get one last rally. Anyways, that's it for the broader areas for the market. And then let's just talk about Tesla. Tesla has this unfilled gap down here at this 205 area. So that tells me that there's likely going to be more downside coming. Look for a little rebound, though. It's going to try to make its way back up to 212 or so. Could go a little higher, but then I think Tesla's going to eventually fail and come down to finish filling the gap at 205. So look for a little pop and drop on Tesla. When you look at the specific levels, we're currently around 210. That's going to be resistance. If we get above that, watch 212. Then we also have 214 to 215. I don't think it's going to pump that much. I think it's going to rebound a little bit, then just continue lower. And if we lose 207.5, there's a good chance it's going to come down to 205. If we lose 205, make sure you watch that. There's some support at 204.25, not that strong. There's 202.5, and then we have 200 as stronger support. A pop and drop is what I'm anticipating, so watch that very carefully. For the QQQ, you're going to be watching this resistance around 370, 370.5, 371, and then we have 372 and then 372.65. For support, I know this got kind of delayed right here. Let me just bring this forward. Very close to this area, we have this historical support. We have some support at 368. Not sure why this isn't marked on my chart. I think this got deleted. But 368 is where we had that historical support to be watching for. So right about here, which is where we had this imbalance. And we have a lot of chop around this area. So we're going to be watching the support at 369 and then 368. If we lose 368, I think the QQQ is going to sink towards 366. And I think that is looking more bearish off this bearish divergence. It's also looking like a distribution phase is developing. So on the QQQ, we look bearish. The daily looks weak. And we have a bearish looking structure on the PPO right now that's becoming more strong. So I think we're going to see more downside. Might pop towards 371 to 372, then reject and start sinking towards 368 very soon. If that fails us, watch it come down to 366. I am anticipating more downside nonetheless. For Nvda, this is showing some relative strength, but one issue with Nvda is the fact that we formed a topping candlestick for today, and it looks like Nvda could start sinking a bit. On Nvda, See, we got this big rejection. We could be forming a head and shoulders like structure. We might see Nvidia start to slow down because we have this gap down here, which suggests more downsides coming towards that 465 area. Also on Nvidia, I just wanted to call out before I go back to that chart. On the daily chart, we look bearish. Look at the daily close. It looks like we have this gap that's going to get filled soon. So I expect it to come at least down to 465 or even below that, all the way back down to these lower levels. We're not going to talk about 440 just yet. It is a possibility, but let's not worry about that. Let's see how it reacts to 465. We have some support around that area. If we lose it, I anticipate it's going to come down towards 460 flat. So I think 460 is a target to be watching for. I think it's going to rebound a bit, retest 472 or so, chop a little bit, then make its way down to fill the gap at 465, and then eventually 460. I anticipate downside nonetheless. For Aapl is a stock that's looking like a little bit less aggressive than a couple of others out there. But one thing I was talking about in my previous video was we had a possible head and shoulders developing, or we could have formed a triple bearish divergence, and that's what Aapl ended up doing. So when we look at Aapl has this triple bearish divergence. The daily close looks more bearish. And I think that it's not looking extremely weak, but I could see a slight sell-off perpetuating. When you look at the 4-hour time frame, Aapl had this double, if not a triple bearish divergence that developed right here. It's actually it's more of a double bearish divergence, not a triple. But it doesn't really matter because it's still looking bearish. And it looks to me like Apple's going to have a sideways day. It's going to rebound a bit towards this 183 resistance, then reject, and eventually slow down towards 180. And I think it's going to bring SPY and the market down with it. So it could be forming a head and shoulders. So look for a little rebound towards the 183s. The market might bounce a little bit in the morning, but then I think it's eventually going to sell off. And I think Apple's going to lead the way down towards that 180 area very, very soon. Like I said before, we're forming a distributive phase, which could lead to more downside. Now, for just a couple of other things worth noting, the dollar is starting to push a bit, and we have this resistance at 106. If it breaks this, that's going to be bearish for the markets, and it looks like it's trying because we have a nice cup and handle like formation on the dollar. On the SQQQ, we're looking bullish. I was talking about this thing trying to form a bottom very close to 18. We went just a little bit lower as we had a bullish divergence. Now we're trying to break out, looking more bullish. Going to be looking for this thing to get close to about 18.96 over the next week. The VIX is looking a bit more bullish. We were talking about a bullish divergence. We're about to get a bullish crossover on the 4-hour PPO. I think it's going to slowly make its way back up to 16.28 as the market has more downside. Just for a couple of others real quick, the IWM I was talking about downside, that's exactly what happened. 166 is a level to watch for. If we lose this, I anticipate 163 could be coming soon. Russell 2000 looks more bearish to me. Microsoft did almost exactly what we predicted, a little pop and drop. We were talking about this thing testing 365 to 366, then rejecting and coming back down. We went to 364.79, 21 cents away from my target before it came down. It's still rejected. Now we're approaching 359. It could pop a bit, retest 361, then reject and start selling off, but it looks more bearish on the 4-hour time frame. On AMD, I was talking about this thing popping and dropping. We were talking about this gap that could have gotten filled from earlier, but now it's trying to reject, forming a head and shoulders like structure similar to that of Nvda. It might pop a little bit, retest this 114 area, then reject, and eventually make its way down to 112. I'm still anticipating that. On Netflix, we talked about a rejection. It came up to 440, the exact target we had, and it came right back down. Might pop again, retest 437, this previous support becoming resistance, then reject and start sinking towards 430. I anticipate more downside. For just a few others, we have Coinbase. Did I skip over something that's important? Let me just double check. I didn't actually skip anything too big. Anyways, going back to Coinbase, I was talking about Coinbase potentially coming down. This thing actually held up better than what I was expecting, but we have a bearish divergence, so it might actually cool off a bit on the RSI and retrace towards 89. That's where we have historical resistance, so it might cool off a bit. I think some news came out that caused it to pop. I didn't really pay much attention to it, but I think it's going to likely come down towards 89 very soon, so I do anticipate a little bit of downside. For Google, lo and behold, the downside came exactly as predicted. We were talking about Google maybe popping, getting very close to about 134 to 135, then rejecting. We went up to 133.96, 4 cents away from the target, and it came right back down. Now we're going to be watching support at 131. It could rebound towards 132, then reject and start sinking a little bit lower. If we lose 131, expected to come closer to 128. It is looking a bit more bearish. However, Amazon, we were talking about this thing maybe popping towards 145 and then rejecting or rejecting from the current level. Unfortunately, it didn't get much of a pop and just started selling off immediately, so even weaker than what I was expecting. So with that being said, we're going to be watching 140 as support. If we lose this, you're going to be watching the next level at 139. That's where we have these wicks right here. If we lose that, we're going to get very close to the 50 EMA. So I think that there's a good chance of it selling off a bit more. It looks a bit more bearish. So look for a little rebound and then more downside if 140 breaks. Meta made an attempt to bounce. We were talking about 325 on Meta, then a rejection. We went to 324 and then rejected instead. So it depends on if Meta continues to break. It has some relative strength, but the 4 hour is looking weaker. So I could see it retracing towards 313 if we end up losing 316.5. So if we lose that support, this 316 area, I expect it to come down to 313.5 and see even more downside. So watch and see if support holds, but I still anticipate downside nonetheless. All right, guys, that's it for this video. I wanted to make this video very brief, so I thank you all so much for listening. Please have a great day. Remain calm, cool, and collected. Know the market might rebound a little bit, but then I anticipate more selling to come. And over the next couple of trading days, I expect more potential downside. At least I'm leaning a lot more in that direction based off the trend and based off what Jerome Powell just said. All right, so I'll see you guys tomorrow morning. Thank you all so much for listening. Have a great day, and peace out.